Good day and welcome to the Apple Q1 FY 2022 earnings conference call. Today's call is being recorded. At this time, for opening remarks and introductions, I would like to turn the call over to Tejas Gala, Director of Investor Relations and Corporate Finance. Please go ahead.
Thank you. Good afternoon, and thank you for joining us. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of COVID-19 on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements or information which speak as of their respective dates. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Tejas, and good afternoon. Today we are proud to announce Apple's biggest quarter ever. Through the busy holiday season, we set an all-time revenue record of nearly $124 billion, up 11% from last year, and better than we had expected at the beginning of the quarter. And we are pleased to see that our active install base of devices is now at a new record with more than 1.8 billion devices. We set all-time records for both developed and emerging markets and saw revenue growth across all of our product categories except for iPad, which we said would be supply constrained. As expected, in the aggregate, we experienced supply constraints that were higher than the September quarter. Before I discuss our results in greater detail, I want to first acknowledge the toll that COVID continues to have on communities around the world. In many places, case counts are higher and health systems more strained than at any point throughout the pandemic. On behalf of all of us at Apple, I want to extend our deep gratitude to the scientists, doctors, nurses, and so many others on the front lines of combating COVID-19. This is our 8th quarter reporting results in the shadow of the pandemic, and while I can't say it gets any easier, I can say I'm incredibly proud of the way our teams have come together and continue to innovate on behalf of our customers. A few weeks ago, we marked the 15th anniversary of the day Steve revealed iPhone to the world. We knew that we had the beginnings of something fundamentally transformative, though none of us could have predicted the incredible and meaningful impact it would have on all of our lives. The creative spirit that made the first iPhone possible has thrived at Apple every day since. We never stop creating. We never stop innovating. You can see that spirit reflected throughout our products, from the incredible performance and capability of our M1 chips to our powerful yet easy-to-use operating systems to our unrivaled iPhone camera systems to the beauty and magic of AirPods. That's why each of our major products leads the industry in customer satisfaction for their respective category. People expect Apple to solve hard problems with easy-to-use products. And iPhone has never been more popular. During the December quarter, we set an all-time revenue record for iPhone, thanks to the strength of our incredible iPhone 13 lineup. This is the best iPhone lineup we've ever had, and the reaction from the press and our users have been off the charts. This past quarter, we also set another all-time revenue record for Mac, with customers eager to get their hands on an M1-powered MacBook Air, iMac, or MacBook Pro. We've been thrilled with the response from Pro users to the M1 Pro and M1 Max chips, and to see how Apple Silicon is blowing them away with its power, performance, and efficiency. Despite the constraints I mentioned earlier, our iPad lineup continues to be indispensable to tens of millions of people, from teachers and students to artists and creators. Customers are eager to get their hands on our 9th generation iPad, which features a beautiful display and double the storage capacity, as well as the new iPad mini with its ultra-portable design. Wearable home and accessories, meanwhile, set an all-time revenue record. Customers are loving the Apple Watch Series 7 with its cutting-edge health and fitness tracking features. Nearly every day, I get notes from customers who share how a heart alert led to a life-saving appointment with a cardiologist. And more recently, I've been hearing from people who tell me that their Apple Watch saved their lives by calling 911 when they couldn't. As I've said, we're still in the early innings with our health work, but every day I am encouraged by our positive impact. We are also making great advancements in audio and are seeing strong demand from customers as a result. The HomePod Mini continues to earn praise for combining the intelligence of Siri with an immersive, room-filling audio experience. And our customers have responded with a lot of excitement to the magic of spatial audio on AirPods, which packs the acoustics of a concert hall. As always, the deep integration of hardware, software, and services is a hallmark of everything Apple makes. It's a principle you can see at work in the introduction of SharePlay, a feature that offers a whole new way to create shared experiences by letting users watch and listen to their favorite content together on FaceTime. And we continue to invest in innovation across our services business, which set another all-time revenue record last quarter and performed even better than we had anticipated. The App Store continues to be an economic miracle for developers around the world and a safe and trusted place for consumers to discover their favorite apps. Since its launch, we have paid developers selling digital goods and services more than $260 billion, with 2021 setting a new record for their earnings. I'm also happy to report that in its first 2 years, Apple TV Plus shows and movies have earned 200 award wins and more than 890 nominations. Among the powerful lineup are feature films like The Tragedy of Macbeth, Coda, and Swan Song, along with many gripping new series coming up, including Severance and The After Party. Each one is a tremendous credit to all the storytellers in front of the cameras and behind them, who've touched audiences all over the world. Fitness Plus, meanwhile, continues to inspire customers to reach their health and fitness goals. We recently introduced Time to Run, an extension of our popular series Time to Walk, as well as new collections of workouts and meditations to help users make more intentional training choices. Despite the pandemic, our retail businesses saw its highest revenue in Apple's history, and we also earned our highest ever customer satisfaction scores. That is a testament to the incredible adaptability our teams have shown as we've reimagined the retail experience. I also want to take a moment to thank our retail employees and Apple Care teams for the deep care you've given to our customers as they look to get the most out of our products, learn new skills, or track down the perfect gift. We have always led with our values and with compassion and care, and never has that been more needed than during the pandemic. Last quarter, we celebrated 10 years of our employee giving program, which we started to help our employees identify and support the causes they care most deeply about. We pledged to match their contributions to organizations doing important work at every level, from their local food pantry to global humanitarian nonprofits. In the last decade, this program has contributed nearly $725 million to charitable organizations. We also celebrated 15 years of Apple's partnership with the Global Fund on Project Red, supporting their life-saving work to expand healthcare services in sub-Saharan Africa for people living with HIV/AIDS. With the support of our customers, we've now raised nearly $270 million to fund prevention, testing, and counseling services for people impacted by HIV/AIDS. And in keeping with our abiding belief in and commitment to education, we also launched a new partnership with the Boys and Girls Club of America. This initiative will help young people across the U.S. learn to code on iPad using our Everyone Can Code curriculum. And we are continuing to drive innovations to help combat climate change. We are already carbon neutral across our own operations, and we are working intensely to meet our 2030 goal of carbon neutrality across our supply chain and the life cycle of our products. To celebrate Black History Month, we will be releasing a special edition Apple Watch Black Unity braided solo loop and a matching Unity Lights watch face. And through our Racial Equity and Justice Initiative, we are continuing to support organizations blazing trails to a more equitable world in our economies, our classrooms, and our criminal justice system. We recognize, as ever, that it takes all of us to confront our most profound challenges, and at Apple we are determined to do our part. That includes our own work in inclusion and diversity, which we are advancing every day. Let me close by saying that despite the uncertainty of the world, there is one thing of which I am certain. Apple will continue to innovate every day and in every way to deliver on the promise of technology at its best. I will now turn it over to Luca to go over our quarterly results in more detail.
Thank you, Tim, and good afternoon, everyone. We are very pleased to report record financial results for the December quarter. We set an all-time revenue record of $123.9 billion, an 11% increase from a year ago. We reached new all-time records in the Americas, Europe, Greater China, and the rest of Asia Pacific. And it was also an all-time record quarter for both products and services. On the product side, revenue was $104.4 billion, up 9% over a year ago, despite significant supply constraints. We grew in each of our product categories except iPad, where supply constraints were particularly pronounced, and set all-time records for iPhone, Mac, and wearables, home, and accessories. The strong level of sales performance, the unmatched loyalty of our customers, and the strength of our ecosystem have driven our current installed base of active devices to a new all-time record of 1.8 billion devices. The growth in the installed base was broad-based, as we set all-time records in each major product category and in each geographic segment. Our services set an all-time revenue record of $19.5 billion, up 24% over a year ago, with December quarter records in every geographic segment. Company gross margin was 43.8%, up 160 basis points from last quarter due to volume leverage and favorable mix, partially offset by higher cost structures. Products gross margin was 38.4%, up 410 basis points sequentially, driven by leverage and mix. Services gross margin was 72.4%, up 190 basis points sequentially, mainly due to a different mix. Net income of $34.6 billion and diluted earnings per share of $2.10 both grew more than 20% year over year and were all-time records. Operating cash flow of $47 billion was also an all-time record. Let me get into more detail for each of our revenue categories. iPhone revenue grew 9% year over year to an all-time record of $71.6 billion, despite supply constraints, thanks to a remarkable customer response to our new iPhone 13 family. We set all-time records in both developed and emerging markets, reached an all-time high in the iPhone active installed base, and the latest survey of U.S. consumers from 451 Research indicates iPhone customer satisfaction of 98%. For Mac, revenue of $10.9 billion was an all-time record, with growth of 25% year over year, driven by strong demand for our newly redesigned MacBook Pro powered by M1, despite supply constraints. We are 1 year into our transition to Apple Silicon, and already the vast majority of our Mac sales are from M1-powered devices, which helped drive a record number of upgraders during the December quarter. Our momentum in this category is very impressive, as the last 6 quarters have been the best 6 quarters ever for Mac. iPad generated $7.2 billion in revenue, down 14% year over year due to very significant supply constraints, but customer demand was very strong across all models. Despite the supply shortages, our installed base of iPads reached a new all-time high during the quarter, thanks to a high number of customers that are new to iPad. In fact, around half of the customers purchasing an iPad during the quarter were new to the product. Wearables, home, and accessories set a new all-time record of $14.7 billion, up 13% year over year, and we set all-time revenue records in each geographic segment. We also continue to improve and expand our product offerings in this category to create unique experiences showcasing our deep integration of hardware, software, and services. In addition to an outstanding level of sales performance globally, Apple Watch continues to extend its reach, with over 2/3 of customers purchasing an Apple Watch during the quarter being new to the product. Turning to services, as I mentioned, we reached an all-time revenue record of $19.5 billion, up 24%, with all-time records for cloud services, for music, video, advertising, and payment services, and a December quarter record for the App Store. These impressive results reflect the positive momentum we're seeing on many fronts. First, as I mentioned before, our installed base has continued to grow and has reached an all-time high across each geographic segment and major product category. Next, we continue to see increased customer engagement with our services. The number of paid accounts on our digital content stores grew double digits and reached a new all-time high during December quarter in every geographic segment. Also, paid subscriptions continue to show very strong growth. We now have more than 785 million paid subscriptions across the services on our platform, which is up from 165 million during the last 12 months alone. And finally, we're adding new services that we think our customers will love, and we continue to improve the breadth and quality of our current service offerings. Just in this last quarter, we have added incredible new content on Apple TV+, on Fitness+, and Apple Arcade, and a brand new way to listen to music with Apple Music Voice. We also announced in November the beta program for Apple Business Essentials, a new service offering that brings together device management, 24/7 support, and iCloud storage to help small businesses manage the end-to-end life cycle of their employees' Apple devices. We are very excited that many thousands of small business customers are already actively participating in the beta program. This announcement is just one of many ways we're expanding our support for enterprise and business customers. With the latest MacBook Pros that we've introduced last October, the new M1-powered Mac lineup has quickly become the preferred choice of Macs among enterprise customers. Shopify, for example, is upgrading its entire global workforce to M1-powered MacBook Pro and MacBook Air. By standardizing on M1 Macs, Shopify continues its commitment to providing the best tools to help its employees work productively and securely from anywhere. And Deloitte Consulting is expanding the deployment of the Mac Employee Choice Program, including offering the new M1 MacBook Pro to empower their professionals to choose devices that work best for them in delivering consulting services. Let me now turn to our cash position. Due to our strong operating performance and holiday quarter seasonality, we ended the quarter with $203 billion in cash plus marketable securities. We decreased commercial paper by $1 billion, leaving us with total debt of $123 billion. As a result, net cash was $80 billion at the end of the quarter. Our business continues to generate very strong cash flow, and we were able to return nearly $27 billion to shareholders during the December quarter. This included $3.7 billion in dividends and equivalents, and $14.4 billion through open market repurchases of 93 million Apple shares. Our business continues to generate very strong cash flow, and we're also able to return nearly $27 billion to shareholders during the December quarter. This included $3.7 billion in dividends and equivalents and $14.4 billion through open market repurchases of 93 million Apple shares. We also began $6 billion accelerated share repurchase program in November, resulting in the initial delivery and retirement of 30 million shares. As we move ahead into the March quarter, I'd like to review our outlook, which includes the types of forward-looking information that Tejas referred to at the beginning of the call. Given the continued uncertainty around the world in the near term, we are not providing revenue guidance, but we are sharing some directional insights based on the assumption that the COVID-related impacts to our business do not worsen from what we are projecting today for the current quarter. We expect to achieve solid year-over-year revenue growth and set a March quarter revenue record despite significant supply constraints, which we estimate to be less than what we experienced during the December quarter. We expect our revenue growth rate to decelerate from the December quarter, primarily due to two factors. First, during the March quarter a year ago, we grew revenue by 54%. Remember that last year we launched our new iPhones during the December quarter, while this year we launched them during the September quarter. Due to the later launch a year ago, some of the associated channel inventory fill occurred during the March quarter last year. As a result of the different launch timing, we will face a more challenging year-over-year compare. Second, we expect foreign exchange to be a 3-point headwind when compared to the December quarter growth rate. We currently expect FX to have a negative impact on growth of 2 points in the March quarter, while it represented a 1-point benefit during the December quarter. Specifically related to services, we expect to grow strong double digits, but decelerate from the December quarter performance. This is due to a more challenging compare because a higher level of lockdowns around the world last year led to increased usage of digital content and services. We expect gross margin to be between 42.5% and 43.5%. We expect OpEx to be between $12.5 billion and $12.7 billion. We expect OI&E to be around negative $150 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. Finally, today our board of directors has declared a cash dividend of 22 cents per share of common stock payable on February 10th, 2022 to shareholders of record as of February 7th, 2022. And with that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Absolutely. We'll take our first question from Katy Huberty with Morgan Stanley. Caller, please check your mute function. We're unable to hear you. Hearing no response, we'll take our next question from Wamsi Mohan with Bank of America.
Yes, thank you. Your margins have clearly been very impressive. So I have one question each on product and one on services gross margins. on product gross margins, that's clearly benefiting from a very strong mix. So, Tim, I'm curious, how sustainable do you think these mix trends are from the data that you see? And can you share any thoughts across how the Pro and Pro Max mix compared to prior cycles? And on the services side, if I could just ask that too, when you look at the gross margins there, that's been really impressive. Can you give us some sense of where within services you're seeing particularly favorable mix trends, and how should investors think about the trajectory of these margins, given some of the sizable investments you're making to drive very successful areas like content for TV Plus, as an example? Thank you.
Wamsi, it's Tim. In terms of the mix, we don't comment directly on mix, but what I would tell you is that we saw strong demand across the iPhone 13 family. And in fact, we had several of the top-selling models in various markets, including the top 5 in the US and Australia, the top 4 in urban China, 2 of the top 3 in the UK, 3 of the top 4 in France and Germany, and 4 of the top 6 in Japan. And certainly based on some external data that I've seen, it does seem to say that we are gaining share as well. So we feel quite good about the momentum of iPhone. And I should add that we were constrained during the quarter.
Wamsi, on the services side, you were asking about gross margin there. As you know, our services business in aggregate is accretive to overall company margin. And as you know, our services portfolio is very broad, and it contains businesses with very different margin profiles. The difference in margin profile is due in part to the nature of those businesses and in part to the way that we account for them. In some cases, we account on a net basis as opposed to a gross basis. And so as a result, the services gross margin percentage over time will be influenced by the relative growth of the different businesses within the portfolio. We do not guide at the product and services level, but I think you've seen the guidance that we provided for the March quarter at the total company level, 42.5% to 43.5%, obviously very strong compared to our recent history, and so we're very pleased with it.
Thanks, Tim. Thanks, Luca.
Thank you, Wamsi. Can we have the next question, please?
We'll take our next question from Kyle McNealy with Jefferies.
Hi, thanks very much. Congrats on the solid iPhone result. That's very good. I assume that you may have prioritized iPhone to the extent there may be similar components that are used for iPhone and iPad. Can you just level set me on that if that's not the case? And if it is, should we see a recovery in iPad as you move past your prime iPhone selling season and you may have better access to components or better supply as we move through the next few months of the year?
Yeah, Kyle, it's Tim. From a supply constraint point of view, as you recall, we said in Q1, the December quarter, that we would have constraints more than 6, and we clearly did have constraints more than 6. For March, we're saying that we will do better or have less constraints than we had in the December quarter. If you look at the commonality between different products, there is some, but generally the challenge is on legacy nodes, and these legacy nodes are by supplier, and so it's much more focused on the supplier than anything else, and versus us, behind the curtain, finding a place to take it. There's not none of that, but there is some of that. But largely we have to take it where the shortages are.
Okay, great. Can you give us any other color on kind of the trajectory of iPad and what's impacting this quarter and where it might go in the March and the June quarter?
Yeah, the issue with iPad, and it was a very significant constraint in the December quarter, was very much on these legacy nodes that I had talked about. Virtually all of the problem was in that area. And so overall, we're not guiding by product, constraint by product level, but overall, we do see an improvement in the March quarter in terms of the constraints going down versus what they were in the December quarter.
Okay, great. Thanks very much. Congrats again on the solid results all around.
Oh, thanks very much.
Thank you, Kyle. Can we have the next question, please?
Thank you. We'll take our next question from Shannon Cross with Cross Research.
Thank you very much. Tim, could you talk a bit about the Mac business? Looking back, it's up about 50% from the calendar 2019 revenue. You did almost $11 billion this quarter, and you're still working through the M1 transition. So, can you talk about where you see the opportunity to gain share? What are really sort of the target markets that you think you can go after, in order to grow this, beyond, I think it was about $37 billion in the last 12 months. Thank you. And then I have a follow-up.
Yeah, Shannon, thank you for the question. Mac set an all-time revenue record at $10.9 billion for the quarter. That was up 25%. And as you point out, the last 6 quarters for the Mac have been the top 6 revenue quarters of all time. And what's further very good about this is we set all-time revenue records in Americas, in Europe, and the rest of Asia Pacific. And we set a December quarter record in Greater China. And so it's not narrowed to a particular geographic area that we're doing well in. It's, almost across the board. The response is very much because of M1. And we got even more response with the MacBook Pro that we launched during the Q1 timeframe. Both the upgraders, which we had a record number of upgraders for the December quarter, but also in markets like China, 6 out of 10 sales are to people new to the Mac. And so it's powered by both upgraders and switchers. Customer satisfaction is off the charts. And so what I see this as is a product that will be very successful in a number of different markets, from education to business to the creative industry, and in all geographic markets. We're not limiting ourselves.
Great. Thank you. And then, Luca, can you talk a bit more on services? Just, obviously outperformed your guidance or your expectations, as well as certainly where we were at. What were the things that really outperformed, and maybe what trends are you seeing that is, driving the extra revenue? Thank you.
Yes, Shannon. It was really great on all fronts. We set December quarter records in every geographic segment. And then, as I mentioned earlier, an all-time record for cloud, for music, for video, for advertising, for payment services, December quarter record in the App Store. So we've done, as you said, better than we were expecting at the beginning of the quarter. This overperformance has been, spread around the world and spread around our services categories. And the reality is, this combination of factors, the fact that the install base is growing, the fact that we continue to have more and more engagement of our customers on all the services. Paid subscriptions is a phenomenal story, right? We now have 785 million paid subs. We've increased 165 million are really powering the business. Very, very pleased.
We'll hear next from Katie Huberty with Morgan Stanley.
Thank you. Can you hear me okay?
Now we can.
Yes.
Okay, good. So first question, just as it relates to some of the disruption you've seen on the component side, manufacturing and logistics over the past couple of years. Are you starting to rethink your broader supply chain strategy or the manufacturing footprint on the back of the significant disruption? Are you happy with the overall geographic exposure that you see in the supply chain today?
Katie, if you sort of step back and look at how we've done, our largest issue by far has been the chip shortage that is industry wide and on these legacy nodes, as I had mentioned earlier. And I think our supply chain actually does very good considering the shortages, because it's a fast-moving supply chain. The cycle times are very short. There's very little distance between a chip being fabricated and packaged and a product being going out of factory. And so no, I don't see that it makes a fundamental change in the supply chain.
Okay, thank you. And how are you thinking about the metaverse opportunity and Apple's role in that market?
Well, that's a big question, but we're a company in the business of innovation, so we're always exploring new and emerging technologies. And you've spoken at length about how this area is very interesting to us. Right now, we have over 14,000 ARKit apps in the App Store, which provide incredible AR experiences for millions of people today. And so we see a lot of potential in this space and are investing accordingly.
Thank you. Congrats on the quarter.
Thanks so much.
Thanks. Can we have the next question, please?
Thank you. We'll take our next question from Amit Daryanani with Evercore.
Yep. Thanks for taking my question. I have two as well. I guess first off on the supply chain side, I think things continue to be fairly volatile. So I'd love to get your perspective if you feel, if things or supply chain issues are starting to alleviate or they still remain challenging. And then maybe I missed this, but could you perhaps tell us how much revenue was left on the table in December because of these supply chain issues, and how did that number shake up in March?
Yeah, Amit, what we've said in terms of December and March was that, it's very difficult to estimate with great precision constraints, but we said that they would be more than the Q4 or more than the September quarter. And we're saying that March will be less than the December quarter. And so that's the kind of verbiage that we placed around it. In terms of, is it still challenging? Yes, it is challenging. And for us, we pride ourselves on getting products to customers who really want them and try to do that in a fast basis. And so it's frustrating that we can't always do that at the speed that we would like. However, March is better than December. And so there's some encouraging sign there. We're not predicting when it will balance overall, obviously, because of the number of variables that go into such a prediction.
Fair enough. Tim, I think one of the topics investors can struggle a fair bit with Apple is really just trying to understand visibility around your product roadmap. And I think some of your tech peers tend to be more vocal about their initiatives. Some even go change their name when they find an initiative that's attractive, I feel. You folks are spending, I think, $23 billion on R&D in 21, so you're really spending a fair amount. And maybe without telling us the roadmap, could you just talk about how do you think about where to focus your R&D resources on? And to some extent, there's a way to think about this R&D spend. How much of it is really done on things that are more evolutionary and products that are out there in the marketplace versus things that we haven't seen yet around potential new offerings?
We have a little different model. We try to announce things when they're ready or close to ready, and try to maintain an element of surprise in there. And so that explains hopefully what we do with our roadmap, and I think that's proven successful for us. And other people can do it differently, of course, but it's proven good for us over time to do that. So we're going to continue to do that. In terms of deciding where we invest in, we look at areas that are sort of at the intersection of hardware, software, and services. And because we think that that's where the magic really happens, and it brings out the best in Apple. And so there are areas that have more than piqued our interest, and we are investing in those. And you can tell through time that we've ramped our R&D spend even more than we were before. And so there's quite a bit of investment going into things that are not on the market at this point, as there always are. Thanks for the question.
Perfect. Thank you.
Thanks. Can we have the next question, please?
Thank you. We'll hear next from David Voigt with UBS.
Great. Thanks for taking my call and my question. I just wanted to dive in and get your perspective on China and sort of the macro climate there and how that sort of pertains to your business as we think about it going forward. And the reason why I'm asking is we've heard some concerns that current policies might have caused a pause in this market, and smartphone inventory, maybe more specifically, the local vendors could be a little bit elevated going into Chinese New Year. So we'd just love to get your thoughts on what you're seeing in this market around this sort of potential development, and then maybe touch on sell-in versus sell-through in that market. And then I have a follow-up.
Well, I can only comment on for us. Our sales grew 21% there in the last quarter, and we're very proud of that. I'll stay away and let other people be the economist and make the macro determinations. But what we're seeing there was super impressive, with all-time revenue records and a record number of upgraders and strong